Behavioural finance is a field that seeks to combine behavioural and cognitive psychological theory with conventional finance to provide explanations for why people make apparently irrational financial decisions, not in their own self-interest. So behavioural finance is part of a field of study that's about decision making, and of course that's precisely what we do at Harding Loevner. We do company research, but in the end we have to make decisions about which stocks to buy, which to sell, and how much of them to own for our client portfolios. So we've tried to incorporate some of the findings of behavioural finance into our structure and into our decision-making process. Starting with the most general, we have people today from diverse backgrounds. We are trying to seek cognitive diversity, believing that similar people will make similar decisions. In general, about the investment process, we emphasise the importance of that process over specific outcomes. We keep everything on the record to try to avoid hindsight bias. That bias says that everything is much more obvious afterwards than it was at the time. Perhaps above all, we emphasize accountability and transparency. In the investment process itself, we begin with qualifying companies for research and use objective data to show analysts not just what they choose to cover, but also what they choose not to cover, to show them the opportunity costs of the work they do. In the beginning of the process, once qualified for research, we carry out that research in a very structured way, trying to overcome the dangers of paying attention only to what is most salient by having structure and discipline, and trying to avoid confirmation bias by demanding collaboration amongst our analysts without seeking consensus amongst them. At the end of the investment process, when we construct portfolios, we rely on independent decision-making by each of 2 portfolio managers, whose decisions are then aggregated to form client portfolios. But of course, that's not really the end of the process. We look at outcomes. We assess whether good results were the result of chance or the result of skill. Our goal is to learn about ourselves as human decision makers and develop decision-making processes that will improve the outcomes for our clients.